Canada's biggest bank expects the Bank of Canada to cut their overnight interest rate by a whopping 125 basis points, which would bring us down to 2% overnight rate by July 2025. That's huge. It's almost as high as the rate cuts we saw all of last year. Because you got to remember, in 2024, the Bank of Canada announced 5 interest rate cuts. And of the 5, they shocked everyone with 2 jumbo 50 basis point rate cut announcements. We went from the highs of 5% interest rates, like at the start of 2024, down to 3.25, which is a pretty big drop. Now, are we expecting more shocking rate cuts in 2025? What does the Bank of Canada have in store for us Canadians and where the economy is going? And according to the biggest bank, these massive rate cuts are required, like a must, to prevent Canada from going into a recession. Interest rates going down to 2% would mean 1, buyers have more buying power in the real estate market. 2, real estate owners will have lower mortgage costs on a monthly basis. And 3, mortgage holders who are renewing, like their mortgages are up for renewal, will be expecting lower rates than last year. And all of this is expected to stimulate our Canadian economy. But what do other Canadian banks think? Well, there's one bank that thinks the rate cuts will be a mere 25 basis points. Pretty big spread. So be sure to keep watching this video to get a breakdown of the 2025 interest rate predictions by every big bank in Canada, all 6 of them. I'll show you their track record for each past prediction that they've had, so make sure to stay tuned whether you're a buyer, seller, or investor in 2025. Plus, as a bonus, I'll tell you what I plan to do in 2025 with my mortgages. Hi, my name is Ed, and if you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe. The big 6 banks, 4 different predictions, 100 basis point difference. That's how we are shaping out right now with these big bank predictions. Why even bother, right? Why? But the idea of this video is that there are a lot of smart people that are hired by the banks to help with this forecasting of where the economy is going. But in uncertain times comes wild predictions. This Trudeau intends to resign has, paused our government just when the US is about to get a new president who is threatening tariffs on Canada. So, a lot of uncertainties. We also have hot wars going on to make things worse. So predictions are very hard, but a lot of buyers, sellers, and investors want certainty. And that's what everyone wants to look at predictions and what people are saying. So here are the big banks' prediction for the Bank of Canada's interest rate policy in 2025. Let's lead the pack with RBC. Canada's biggest bank leads the pack with a 125 basis point rate cut by Q3 2025. On the flip side, we got Scotia with a mere 25 basis point in the same time frame. And the rest of the big banks are somewhere in the middle. So who's right? Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put decades of experience to work for you. Well, this over here is each bank's prediction last year, and you can see that only National Bank got it right for the overnight rate. And I'll let you decide who you want to believe. Now, one thing I will note is that TD did get the important 5-year bond rate right, which correlates to the fixed rate mortgages, but more on that later. So what does this mean for you looking to transact in the real estate market in 2025? It means that your variable mortgages could be in the high 3s and low 4s by June 2025. And towards the end of 2025, you could be in the low 3s to like the high 4s. This 100% is going to increase market activity. Specifically, I'm talking about sales, not prices. 2024 saw about 67,000 sales in the Greater Toronto area, and I expect the sales figure to increase by 20 to 25%, which, funnily enough, is still below the 10-year average. Keep in mind, there was a massive bull run in 2020 and 2021. As for prices, you can see my prediction videos for the Freehold market and the condo market in the description below. Now, in addition to this craziness that's happening in the government and the whole world, uncertainty lies in some of these renewals, like mortgage renewals that are happening in 2025. While rates are down from last year, most certainly, but most homeowners renewing from a 5-year mortgage that would have gotten like circa 2022 would have gotten a mortgage rate around the pandemic times for 2%, which means that they're renewing into the 4%, which still means that they're going to see their monthly mortgage increase by 30%, give or take. This gets worse if you had a negative amortizing mortgage, the static variable kind. So this 100% will also spur some additional inventory coming to the market. Will there be more buyers coming off the sidelines due to the lower rates versus the amount of inventory coming? That's to be determined. So there's still a lot of uncertainty in the market right now. As for fixed rate mortgages, they generally align with the 5-year bond, which is unfortunately based on the US economy, and they're doing much better than us. So most of the banks aren't expecting it to lower much. Currently, it's in the low 3s, which is exactly where it was when the Bank of Canada started cutting rates in June 2024. So if you are a fixed rate borrower and looking to buy right now, it's very much worthwhile to get a mortgage rate hold because the fixed rate could go up from here in the next 90 days or so. This is similar to what we saw in 2022. What we are doing is we're advising all our clients who are buying right now to go and get one anyways, just so that you can compare and shop it around against the variable rate when the property is closing, given all the uncertainty that's happening in Canada and the world. Having options never really hurts, right? Now, as for me, any mortgages I have renewing in 2025, I 100% plan to go with a variable rate. Here's why. I'm very comfortable chasing the variable rate down and leaving my options open should I want to go into a fixed later on when I get more data on how the economy is going to look like in 2025. I'd rather keep my upside open and cap the downside based on new coming data in 2025 because we don't know what's happening. There's just too much uncertainty, right? Options never hurt because there's just too much uncertainty right now with the new US president that's coming next week. We got a new Canadian prime minister. When this election is, TBD. So my base case right now really is that I think rate cuts are coming harder and faster than most people think. And I've been saying this, I think we'll probably end around 2.25% or like 2.5% for the Bank of Canada rate by like mid-2025. And since rate cuts are coming so fast in Canada, I wouldn't be surprised if we're going to get another round of inflation, whether it's imported because we have a weak loonie or cutting too much and spurring the economy too fast, similar to kind of that double dip inflation we saw in the 80s, given all the volatility. So I do think there's going to be an opportunity to lock in lower rates in the next 2-3 years, but just not right now. Of course, we'll get new data and new inputs and my output may change, but I'll continue sharing my outlook with you on this channel. Now, the biggest thing in the real estate market that buyers, sellers, and investors want is certainty, which is what I've been saying this entire video, certainty. But unfortunately, I just don't think we're going to get that. We're in a decade of volatility and we just need to expect and be prepared for it. Now, if you do want to know my thoughts on the latest shenanigans with Trudeau's intended resignation and how the freehold market is going to fare in the Greater Toronto area in 2025, make sure to check out this video here. I can tell you my thoughts on what's going to happen with the freehold market is likely going to shock you. So make sure to check that video out and I'll talk to you then. Remember, your move, your future. See ya.